Hey, what's up, stock compounders? Brad here. So it came to my attention by one of you subscribers that Bill Ackman just recently, last week, was buying Howard Hughes Corporation stock. Okay. And this wasn't a typical 13F filing disclosure. This is because Pershing Square owns more than 10% of the outstanding shares of Howard Hughes. So basically, whenever Bill Ackman buys or sells any of Howard Hughes, he has to disclose what he's doing within, I think it's 2 days. So, it got me curious. Is Bill Ackman super bullish on Howard Hughes at the current price? And I wanted to dig into that a little bit deeper. So I'm going to walk you through kind of my process for that. So let's go to the sec.gov and we're going to look up Howard Hughes Corp. We're really looking for this most recent filing, which is General Statement of Acquisition of Beneficial Ownership. And that was filed on January 11th. So we're going to open this up. And we're going to scroll down here. So item 3, source and amount of funds or other consideration. Okay. The reporting persons on behalf of Pershing Square Holdings were put 610,000 shares of common stock by the put counterparty. Okay. So this is saying, Pershing Square was selling put options on Howard Hughes. And there were a number of those that were exercised, which means, Pershing Square was obligated to buy that number of shares based on those put options. So that's 610,000. Okay. Now that doesn't really give us a sense of how bullish Ackman is at a certain price. I mean, sure, Ackman sold the put options based on a specific strike price. So that's an indication, but it's not as strong as an indication as this down here. Pershing Square Holdings purchased 1,942,000 shares of common stock for an aggregate purchase price of 153 some million. Okay. So based on that, this 1.942 million shares of common stock at that price, he bought it around $79 per share. Okay. So there was a massive increase. Currently, Pershing Square owns just shy of a quarter of Howard Hughes, 24.5% of the outstanding shares of common stock. So let's take a look at Data Roma to get a sense, well, how big is this position relative to the total portfolio, relative to some of his other equity positions? So you can see down here, at the end of the third quarter of 2020, at the end of September, Howard Hughes was the smallest equity position in Pershing Square Capital Management at 7% of the portfolio. And you can see that's represented by 10,918,000 shares. But if we go back here, we remind ourselves, currently that's sitting at 13,470,000. Okay. So, it's a considerable increase. And also you look here, the reported price. So this reported price is really just the price at the end of the quarter. So at the end of quarter 3, 2020. Now, he bought at 79. Currently today, the price is 84 on January 14th. Okay, 84. So if we take his current share count, multiply it by today's price of $84 per share, we get a value of about 1.13 million. Okay, sorry, billion. 1.13 billion dollars is, my best estimate of Bill Ackman's current stake in Howard Hughes. So, I'm sure these prices have changed as well. All of these are kind of a moving target. But if we, for a moment, assume they're the same, Howard Hughes it may be a top 5 holding at this point. Okay, it's kind of neck and neck with Hilton, according to these numbers at the end of quarter 3. So it's a significant position, over $1 billion in Howard Hughes. So that gets me interested, right? It's a relatively high conviction idea. He's been adding significantly to his stake recently. So let's try to get a better sense for, what the company is actually worth. Do I want to dig into this and see if I want to consider adding Howard Hughes to my portfolio? So here's an article from Million Acres. I guess it's from Motley Fool. Okay, Bill Ackman just bought even more Howard Hughes. He's held a stake in this master planned community developer, Howard Hughes Corporation, since its 2010 spinoff from General Growth Properties. So that's a long time, even for Bill Ackman to own a company, more than 10 years. So that's pretty impressive. He must know it very well. Ackman clearly sees value in the real estate company as he's multiplied Pershing stake several times over since the pandemic sent shares plunging. And apparently he still sees value even after a big rally. So I think Howard Hughes dropped to like $35 a share back in March. And like I said, it's up to 84 now. So it's more than doubled from the bottom last year. You can see here he acquired an additional 2.55 million shares. Like I said, some of those were from put options, but the majority of it was bought on the open market at $79 per share, which is the next paragraph here. Right, owns nearly 1/4 of the stock. Yep, 1.1 billion. So, if you want to learn more about, Bill Ackman's involvement in Pershing's, in Howard Hughes, this is a decent article here. I'm going to link to this article in the description if you want to just familiarize yourself a little bit more. The next source I really like to try to get a sense of, what kind of value are we looking at here? How can I value this myself? Well, a great way to do that is to look at someone else who's already valued it, another smart investor who's already taken a crack at that. And of course, you don't want to take this at face value. You want to kind of check to see if your reasoning is similar to theirs. If what you would tweak based on your own assumptions, kind of verify the numbers, all of that stuff. But I do really appreciate Value Investors Club. I think it's a great resource for just kind of wrapping your head around different businesses. And there's a very recent write-up in Value Investors Club for Howard Hughes, June 2020. So, half a year ago, give or take. The price was down at $54 a share when this write-up was done in the summer of last year. So I'm curious, what value do they see? What is their kind of fair value for Howard Hughes? So I kind of scan, and here it says Howard Hughes Corp shares are worth $84 according to a net asset value based on a relatively conservative sum of the parts valuation, representing about 50% upside versus current levels. Okay, so the stock's at 54. This investor thinks it's worth 84. Okay, so under a more bullish scenario, HHC is worth perhaps greater than $105 per share. So right now we're sitting at 84, like I said, which is exactly kind of the conservative valuation that this particular investor came up with back in June of last year. So, it's not super compelling based on this valuation to me. I don't want to buy something that's fairly valued. I don't want to rely on a bullish scenario. to kind of get my returns on a company. So, but this is a really good write-up. There's a lot of thought that went into this. I like the valuation piece, so they kind of value each element of the business. Core master plan communities land, approximately $75 per share. Operating assets, which fall under 3 different baskets. Other assets, you've got Hawaiian condos, New York City Seaport, Chicago Tower. The cash and deposits, there's a value for that. The debt, about $99 a share. Obviously, you'd subtract that. Cash burn and remaining equity commitments, which is also something you'd subtract to come up with that $84 per share. Talk about risks, which are very important to understand when you're making an investment. What's the downside? What could happen that causes me to lose money on this investment? So you can see that there's a lot of work went into this valuation. There's kind of a chart of both the base case, which is the $84, and the bull case, which is looks like $105 as the bull case estimate of fair value. So there you go. Great resource if you guys are considering investing in Howard Hughes, or you just want to go deeper. Now, the last resource is something I remembered because I follow Chris Meyer. Chris Meyer is the author of 100 Baggers, Stocks That Return 100 to 1 and How to Find Them. And I remember reading through his blog posts in the past. I remember that he's bullish on Howard Hughes. So I just went to his blog. I did a search for Howard. And this blog post came up from about a year and 3 months ago. Wow. A year and 3 months ago. So he gets into kind of what he sees in Howard Hughes. Okay. This is right after Howard Hughes took a bit of a dive. Which it's kind of funny. Where does he say it? Anyway, so a little background. So he thinks, he says, and with most net asset value estimates ranging from 170-ish and higher. So, that's quite a bit different than what we saw, just... what is that, 8 months later in June of 2020. So that's interesting that there's such a difference in valuation. It's basically the person the investor who valued this 8 months later came up with half the value that Chris Meyer is suggesting here. But he also says, this is interesting, after reaching out to 35 investors, 14 of who did deep due diligence on the company, nobody came back with an offer. So, the idea there is, okay, so you got a net asset value of 170, but if nobody's willing to pay anything near that, how important is that in making an investment decision on this company? And, he talks about some compelling attributes of Howard Hughes: self-funding, track record of NOI growth. I mean, this is a pretty compelling upward trend for net operating income. So there's some good stuff in here. Right. On the call, someone asked Ackman about the various NAV estimates out there that seem to start around 170. Ackman said these NAVs were conservative. However, after a failed attempt to sell, the NAV becomes more academic, right? What's a NAV if nobody's going to buy it? The focus should now be on NOI and free cash flow and more traditional metrics like return on capital. While I like having a large NAV and one that should continue to grow on a per share basis, it's not my focus. Over a longer period of time, the share price should gravitate toward NAV, especially as cash spinning properties make up more and more of that NAV. And of course, here insiders will be increasing their commitment. We've seen that play out as Ackman, has gone from owning 13% of the company in the fall of 2019 to now nearly 25% of the company, just a year and 3 months later. Of course, there's always development potential. So, great stuff here. I mean, I really respect Chris Meyer. He did a ton of valuable work in his book, 100 Baggers. And he's really the reason that in my initial screening process for stocks that I'm considering diving into, I include owner-operator, right? I include inside ownership because, if management isn't willing to own the business, own equity in their own company, in the company they're managing, why should I be interested in owning equity in that company? That just makes intuitive sense to me. So this is a great resource, guys. Again, if you're considering Howard Hughes, look at this Chris Meyer blog post from October 22nd, 2019. So, just taking all of this together here, I don't like, I don't like that this investor here came up with 84 as a fair value. Bill Ackman, having owned this company for 10 plus years, I mean, even though he's a fantastic investor, I think the longer you own something, the more attached you can get to it. The more in your mind you can kind of paint a rosy future for that company. So there could be biases here that Bill Ackman is succumbing to. We know he's had investments in the past that haven't worked out, and he's kind of doubled down on, and so he's not immune to the biases that all of us face. And he's really the only super investor with a fair bit of skin in the game when it comes to Howard Hughes, at least the super investors that are tracked by Data Roma. So, and on top of that, it may be his fifth largest holding, maybe his sixth largest holding. So, I'd like to have something with a little higher conviction if I'm going to clone something that Bill Ackman owns. So those are some thoughts on that. Also, I own Seritage Growth Properties, which it's a different kind of real estate company than Howard Hughes. But I'm a pretty concentrated value investor, and I don't necessarily want to have huge exposure to one sector, real estate, in my portfolio. So that's another bit of a strike against Howard Hughes. So that's where I stand on it. I'm not super interested in digging deeper at $84 per share. But like I say, being a shameless cloner can be very good for your financial health. So, I think if you guys have any interest in Howard Hughes, kind of what they do, what their products are, what they're doing with real estate development, I'd say it's probably worth a deeper dive. And maybe there's value to be found here. So anyway, guys, just wanted to share kind of my thought process when a super investor buys something. What kind of quick due diligence do I do in order to decide, all right, do I want to go deeper on this particular company? So again, I'll link to these particular resources in the description. Take a look at those if you want to dive deeper. Thank you guys for keeping me on top of developments like this. I did a couple videos on what's on my wish list, right, recently. And Alibaba was on there. And I had a target buy price of, I think it was $216 per share on Alibaba. And one of you guys reached out and said, hey, are you buying Alibaba? It hit your target share price. So it's great. I don't even have to set alerts, right? I don't have to use a service. You guys are just telling me, which is fantastic. It's like you guys are my alert service. So, just kind of expanding on when you guys tip me off when something happens that I might be interested in. I appreciate it, and it's fun to kind of do a dive on it like I did here and see if it's worth pursuing for myself, and if I think maybe it would be for other people. And so for Howard Hughes, for a lot of people, I think it could be worth a deeper dive. But without any more of that, I will leave it there, and I will see you all in the next video. Take care.